Ever look at a chart and just feel like you're missing something the big players see? You know, those moments where price just takes off or reverses, and you're left wondering what just happened. Well, today we're diving into an indicator that might just help you cut through some of that noise and spot some really interesting clues left behind in the market. This is a video about a unique trading indicator known as the Multi-Timeframe Fair Value Gap, or FVG, by Zeiierman. It's a tool that you can use to help visualize these things called fair value gaps, which can give you a hint about what the institutional players might be up to. We're going to go over what this indicator is and how you can use it in your trading. If you happen to find value in this video, remember to leave a like. Now, to get started with this indicator, you first of all want to go to TradingView, the trading platform that I'm going to be using. If you need to sign up, there's a link in the video description for you to do that. Next, you want to load up whatever chart you're interested in, could be any time frame or security, and then click on Indicators at the top. In the search box, just type in Multi-Timeframe Fair Value Gap, or even just FVG Zeiierman. It's going to be this one by Zeiierman. Go ahead and click it to add it to your chart. Ladies and gentlemen, this is the all-powerful Multi-Timeframe Fair Value Gap, or FVG, indicator by Zeiierman. So, what's it all about? In a nutshell, this indicator is designed to dynamically find and show you these things called fair value gaps, or FVGs, across different timeframes. These FVGs are basically imbalances in the market, little gaps that can sometimes act like magnets for price, or show where big institutions made a move. So what are these fair value gaps, or FVGs anyway? Well, an FVG happens when you see a specific three-candle pattern. Imagine 3 candles in a row. If there's a space or a gap between the top of the first candle's wick and the bottom of the third candle's wick for a bullish FVG, or between the bottom of the first candle's wick and the top of the third candle's wick for a bearish FVG, that's your FVG. It's like the price moved so fast it left a little void. These areas are often thought of as footprints of institutional activity. And the cool thing about this indicator is it helps you track them with some serious precision, and not just on your current chart, but across any time frame you tell it to look at. It uses something in its code, for the techie folks, it's request.security, to pull in that price data from other timeframes. This is awesome because it gives you a much broader perspective on where these potential imbalances are, without you having to constantly flip between charts. It's like having multiple radar screens feeding info back to your main display. You'll also notice that not every tiny little FVG gets plotted. That's thanks to the wick-sensitivity and impulse filter. The indicator is pretty smart. It measures the size of the wicks on the candles that form a potential FVG and compares them to a running average. You can actually set a threshold for this, so only FVGs that are formed by a pretty strong impulsive move, a significant price dislocation, will show up. This really helps cut down on the noise and focus on the gaps that might actually mean something. Then there's how these FVGs get mitigated, or filled. Price often revisits these gap areas. The indicator has midpoint mitigation logic. You get a choice here in the settings. You can have the FVG box disappear once the price fully closes the entire gap, or you can set it so that just touching the midpoint of the FVG is enough to consider it mitigated. This second option can be really useful if you're looking for faster reactions in a live trading environment, as some strategies might only need that midpoint touch as confirmation. One of the coolest and most insightful features, I think, is the bull and bear power visualization, which is volume weighted. Inside each FVG box, you can see these little sub-bars. These bars try to estimate the buying and sell effort that actually went into creating that gap in the first place. For a bullish candle that's part of an FVG, it looks at how much buying power drove the price from its low up to its close. For a bearish candle, it estimates the selling pressure from its high down to its close. These bars are color-coded, usually one color for bullish effort, another for bearish, and they're drawn proportional to the strength of the buyers or sellers. It's like slicing into the candle's volume to see who is really driving that move. This is a game changer because it transforms the FVG from just a price gap into a kind of live volume map of intention. And to keep track of this, especially if you're looking at multiple FVGs, there's an optional FVG Table. This is like your command center, a dynamic on-chart overview that you can toggle on and off. It lists all the currently active, unmitigated FVGs in a side panel. It updates automatically as new gaps form and old ones get mitigated. The rows are color-coded for bullish and bearish FVGs, and you even get timestamps so you know exactly when each gap formed. No more frantically scrolling back or switching timeframes to find that FVG you saw earlier. It's all there in a concise, real-time list. And finally, there's the FVG Trend Filter. This uses a pretty neat bit of math, a Butterworth smoother if you're curious, to create a trend line based on the average FVG values. It's designed to give you a smooth but responsive directional signal. Think of it like smoothing out choppy water on a lake to see the main current. This helps you categorize FVGs. If the FVG trend filter is pointing up, you might give more weight to bullish FVGs. If it's pointing down, bearish FVGs might be more interesting. It's another layer to help you distinguish between FVGs that are aligned with the trend versus those that are popping up as counter-trend signals. So how do you actually use this thing in your trading? Well, the first and most obvious way is to identify those institutional gaps. Since these FVGs are often seen as areas where big money made a move, they can become pretty strong support or resistance zones. You might see price react sharply when it comes back to an FVG, or they could even be targets for liquidity sweeps or retracements. Just knowing where these zones are can seriously help your trade planning. Next up, you can use it to react to the trend or even counter-trend moves with more precision. That built-in FVG trend filter we talked about is key here. Let's say you spot a bullish FVG forming. If the trend filter is also showing that the market trend is clearly up, that bullish FVG gains a lot more validity. It suggests a higher probability of continuation. But if the trend filter shows the trend is actually down, that same bullish FVG might just be a counter-trend bounce, something you'd approach with a lot more caution, or maybe even see as a potential liquidity trap set by institutions. It really helps you avoid chasing every single signal and focus on the ones that align with the broader flow. And then you absolutely want to get context from that bull-bear power feature. You're not just seeing a gap, you're seeing the story of effort and intent behind it. A bullish FVG that was formed with strong buy effort on those internal volume bars. That's a good sign for continuation. It suggests buyers were really in control. But what if you see a bullish FVG, but inside the box, the bull-bear power shows dominant sell effort? That's a bit weird, right? That could be a warning sign, maybe a trap or a hint that a reversal is coming. It transforms the FVG from just a price level into something that tells you about market conviction, or lack thereof. This can be critical for confirming the strength of an imbalance or spotting those tricky trap scenarios early. And don't forget the FVG table. This thing is indispensable, especially when the market's moving fast. It acts as your command center. You can track live and historical gaps, monitor older zones that are still valid, even if they're way off your current screen, and gauge the market bias at a glance by seeing the balance of bullish versus bearish FVGs. It's perfect for risk management, knowing where nearby unmitigated zones are, and for confluence stacking, where you combine FVG signals with your other analysis. You can even use it for planning layered entries or exits, scaling into or out of positions with a clear map of the market structure provided by these gaps. It really helps you stay organized and make decisions with more precision. Now, if we dive into the settings, you've got a good amount of control. You can choose the FVG timeframe, so the indicator pulls FVG data from any timeframe you want, separate from your main chart. The sensitivity setting lets you filter out weaker FVGs by defining how impulsive the move needs to be. You can decide if FVGs are mitigated on midpoint touch, or if they need a full close. There are table settings to control its position and width. You can also customize the FVG style, like the colors of the boxes, how far they extend, and the bullish and bearish overlays. And of course, you can enable or disable that trend filter and even fine-tune its smoothing controls, like the passband ripple and cutoff frequency, to balance how much noise you're willing to accept versus how quickly it reacts to trend shifts. It's really built for precision and personalization, so you can tailor it to your trading style. So in summary, the Multi-Timeframe Fair Value Gap, or FVG indicator by Zeiierman, is a really comprehensive tool. It's not just about spotting gaps, it's about understanding them. It helps you see these potential institutional footprints, analyze them across different timeframes, gauge the strength and intent behind their formation using volume insights, and even track them with a handy on-screen table and a trend filter. It takes this idea of price inefficiencies and gives you a whole suite of tools to visualize and interpret them, trying to turn complex market activity into more understandable visual cues. It's like getting an X-ray look into those institutional footprints. Now, it's super important to remember that this is not financial advice. The strategies and ideas we talk about using indicators like this are for educational purposes. Trading involves risk, and you should always do your own research and consider adding your own price action analysis, fundamental analysis, or other confluences before making any trading decisions. This indicator is a tool, and like any tool, it's how you use it that matters. If you found value in this video, remember to leave a like, or even better, consider subscribing to stay tuned. Thanks for watching. See you next time.